excellence is never an accident. It is always, always a result of high intention, sincere effort, and intelligent execution. And today in this video, we are going to be breaking it down, all three of those. We are going to be breaking down the keys to becoming an excellent trader. There's only one way I know, right? A lot of people may think there's this golden strategy out there that's just going to enlighten you in a way where you're going to view the market completely differently and you're just going to execute flawlessly day in and day out. And this is the reality of the scenario. The only way to become a good trader or become good at anything for that fact, is to go through the trenches, is to work as hard as possible. But you can't just work hard. Trading is a very unique game. You can literally work hard but work the wrong way and get worse. You have to work smart. You have to have that high intention, that sincere effort, and most importantly, the intelligent execution. So I'm going to break down what I do. I'm going to show you guys. I'm going to break down the high-level summaries that HPT builds every single month. These high-level summaries are so effective, it's insane. I started doing these 6 months ago. I started handing them out to people, and the amount of success that my team has seen just from breaking down high-level summaries, which are data reports on our edge, it's given us so much more clarity. It's helped us understand the importance of execution, and it's helped us really understand what to look for day in and day out. There's only one way to get good at this game, and that's hard work. So today we're going to be putting in that work, and we're just going to be doing a 2-week update. This is the month of February. So far we are at an 80% win ratio. We've had 10 trades. Our edge has presented itself 10 times in the month of February. 2 of them were losses. I really want to break down the ins and outs of our strategy. It's not a golden strategy, but it's a simple, repeatable, effective strategy. And those are the 3 main components. If you want to become a good, consistent, profitable trader, you have to have a strategy that you can actually repeat. A strategy that doesn't take a lot of mental fortitude, right? It's not going to be extremely complex. It's got to be simple. If it's not simple, I can't do it, right? So I'm going to be showing you that strategy today. Here's a perfect example of it in front of us. It consists of 3 very clear and easy to spot components. Number 1 is identify open print. Open print is the 930 bell price. It is significant because there is vast amounts of volume there. Number 2 is the moving average cross. I use the EMA cloud because it's very simple to see and spot when it's shifting. It goes from red to green. This is the 5 EMA and the 21 EMA. Everybody knows how much I love moving averages. I got to use them the correct way. They were on my chart my whole life, but I wasn't using them the right way. Do not be how I was. Use them the proper way. Use moving averages to understand who is in control of market conditions, and not just understand who's in control, but understand if it's a regular or irregular trend. We're going to be breaking that down. Number 3 is my favorite part of this strategy because it keeps me so well grounded, keeps me patient, and gives me sniper entries. That's the RBI, GBI entry criteria. That's a red bar ignored or a green bar ignored. In the example above, you can see here, red bar completely ignored. Why is it ignored? Because the next candle blows the top of it off. We do not wait for the candle to close. We do not wait for the retest. Once that candle blows the top of that previous candle, we get in the trade. 3 very simple steps, very simple variables, easy to spot, and we focus on execution. Right? So let's break down. Before we go into the month of February, I want to show you guys here. This is the large data review. Right? So this data in front of you, this is 6 months. 6 months, 97 trades in the last 6 months that we've spotted our edge, our criteria. I've gone much further and realized there is a 76% chance that my edge will present itself each day. Out of that 76% chance, there is a 76% chance that it will be a profitable trade, right? So understanding, why is data so important? Am I just up here talking numbers to sound smart? Absolutely not. We need data so that we can make intelligent decisions in the market. Your emotions are going to pop up. You're going to get irrational. And anybody that knows, anyone that's made bad decisions before, which is everybody, they're always emotional. especially in the market. If you're trying to become a consistently profitable trader, let me ask you, are your emotions consistent? Is your input to every single trade consistent? Are you a consistent person? Do you have a solid routine that you can actually stick to day in and day out, regardless of how you feel? Or do you cave to your emotions? Do you eat when you want? Do you smoke, do drugs, drink? Right? These are very serious questions, but this is the thing. This is what it took for me to become a better trader. I had to give all that up. I used to be over 300 pounds, had to get in shape. I had to control the food. I had to control the drugs. I had to control the alcohol. See, we have to stop making emotional decisions. And until we gather data and focus on that data, review the data, we're not going to have anything else to make our decisions off. See, when I'm feeling emotional or when fear is settling in, I lean on my data, right? When I'm feeling impulsive, I go, hey, Josh, where's your expectation come from, right? When I want to get into a trade and FOMO is starting to settle in, I go, hey, Josh, there's a 76% chance that your edge is going to present itself. Therefore, that means that there is a 24% chance that it won't. We need to be able to accept that. Not just accept that, but be able to not make decisions and make decisions based off that, right? Because if there is a 24% chance that my edge won't present itself, that means out of 100 trades, 24 of them, I'm going to be sitting on my hands. See, data helps us collect the correct expectation. And then once we understand the expectation, we can then act on it appropriately. We have to rewrite our mental fortitude. We have to rewrite the paradigm in our mind that's forcing us to get into bad trades, that's making us make bad decisions. See, when you let your flesh dictate your decision-making process, you will always fail. Right? So therefore, there is a large data review in front of you, 6 months worth of trades, 97 of them, 74 of them were profitable. This is a 76% win ratio. Right? Once again, I'm not sitting here going, oh my God, this win ratio is amazing, but it is reliable, and it is repeatable, and it is simple, and it is highly effective. For anybody that likes this video and wants to get involved more with HPT, click the links below. I could send these to you on a monthly basis for free. I'm not doing this forever, but I am doing it right now. So if you want to get involved and on our list and affiliated with HPT, click the link below. And if you want to take it one step further and really dive deep into our resources and develop the skill sets needed to become a habitual, consistent, profitable trader, click the links below and get involved with Trader Bootcamp. Comes with 12 months access to our Discord platform. Right? So without any further ado, let's break into the data. All right, so in front of you, you're going to see here the month of February, we had 10 trades that presented our edge, right? Our edge is very simple. We already went over it. Trade number 1, this was 2/3/2025. I added something new here to these videos, and it's the notes section, right? I wanted to become a little more detailed when we were gathering data to put in notes so that we can understand a little more context of what that day was actually telling us. Right, so you're going to see here, open print, we have all of our required specifications. And the first trade we took it met all of our criteria, right? We took a short play here, right? Price rallied above open print, ripped into a resistance, sold off. We got a green bar here, ignored, went short, and we got a $4 move here, and it was right in front of news. And this is what happened, price rallied up. Now, notice here, our required specifications mark this as a profitable and good trade. It met all of our requirements. But the market literally rallied in the opposite direction right after those requirements were met. Are we going to change our requirements? Absolutely not. We're going to mark this a winner because it met all of our standards. Your standards is what you need to look for each and every single day. All right? And this met all of them. This trade went $1.04 in our favor, and it was a good trade. Number 2, this trade was beautiful, right? 2/4/2025. Very simple. This is what I look for each and every single day. Open print here is established, right? Let me just zoom in here. Buyers, what I really liked about this trade was how sellers brought price below the 50, and then buyers said, no, this is our market. This is our open. Look at that wick right there. That wick right there tells us everything we need. Red cloud before it. Green pushes through. We get our red bar ignored on this candle. We took it long, targeting 600. That was a beautiful trade. What I really like about this trade, too, is look at the notes. entered trade 10 minutes before the news, choosing to trust the strategy over emotions. Once again, how many times have you talked yourself out of entering a position? I used to do it all the time. I would get completely frustrated because I would see my edge, it would look beautiful, but news is coming out, so I wouldn't take it, right? Well, what would happen is then I'm frustrated after missing the move, and then I end up forcing a bad and irrational setup later down the line, right? So what I loved about this trade was how me and the team showed tons of confidence in the strategy by still entering into the position 10 minutes before news. And look, it turned out to be a fantastic trade. All right, number 3, 2/5/2025. This was a really awesome trade. And what I want to really break down about this is the market doesn't care about your stop loss. The market isn't, going to change its behavior to keep you in a trade. You need to be adaptable. Right? So this was a very good trade, but I ended up getting stomped out of it before it went in my favor. And I want to show you where I went wrong, or if I didn't go wrong, right? That's debatable. So 2/5/2025, we take the market long here, open print, price sells off, buyers rally, we get the moving average cross, we get the red bar ignored. I enter long on this 1030 candle. This met all my requirements, therefore I have to take the trade. Once again, we make highly intentional decisions, right? With intelligent execution. Therefore, when I see my edge, I pull the trigger. No ifs, ands, or buts. I do not care. When I see my edge, I act on it because it is not a special trade. It's not a unique trade. It's a process that we've developed and we've tailored for a reason. Therefore, when I see it, I enter. But look what happened. This red candle that I was getting in off, this red candle previous to the candle I got in on was, I think, an 88, let's see here. Yes, it was an 88-cent candle. So if I'm going to long the market based off of RBI that is 88 cents, I have to be ready to put my stop loss at least 88 cents away. Now, this may be hard for some traders, especially if you're trading zero-day options. But this is the reality of the scenario, right? If the strategy only works if the red bar that you got in off of, if you've put in your stop below it, right? This is very important. It's key. It's critical. It's crucial because look what happened. I ended up getting stomped out of this position emotionally because I was up on this position around 45%, and then the market reversed on me. So once the market started to reverse on me, I wasn't willing to go that much into drawdown, right? So I wanted to cut it quick. Not saying that was bad. It's actually smart because there's a higher chance if the trade's going against you after it went for you, it's probably not going to come back. But look at here how price rallies down below, never breaks the 50, never invalidates the strategy, and then price rallies to the upside, right? This was a good trade. It met all of our requirements, and I learned a lot from this trade. If I'm going to enter based off a specific entry criteria, you got to see it through. All right, 2/6/2025. This was our second loss for the last 2 weeks. Let's see here. Open print's established. This is 2/6/2025. Open print is established. Price comes into it and rejects twice. Get a green bar here. Ignored. We go short right in the previous day high, right in the end of day, and then news comes out and completely blows the market in the other direction. Now, this is debatable because a lot of traders have asked me and go, hey, Josh, why'd you short into previous day high? Why'd you short into end of day? Yeah, end of day and previous day high are very volatile levels. Therefore, there's a very high chance of a reversal or some sort of price action happening at these levels. Should we have waited? Well, in my opinion, I would take this trade again. Why? Because when you see a healthy trend as such, where the trend is hugging price, there's no extensions, it's very close to price, and you're coming, I don't care what level you're coming into, this is what we call selling acceptance, right? When you're getting a nice sell-off and there's not much extension on the moving average, this is a sign that the sellers are in control, the price action's controlled, it's healthy, it's rational price action. It's not violent and erratic. Therefore, it has a high chance of continuing. I would definitely take this trade again. Ended up going against me, right? But I am not going to build a different belief system just because this trade was unprofitable. This is very important. Most traders, when they have a losing trade, they think they did something wrong. And 90% of the time, they did do something wrong. But there's still 10% of traders that are executing properly, and those trades are not going to go in their favor. You have to be able to ask yourself and be honest with yourself, did I execute properly? And if I did, then this trade was a win. All right, 2/8/2025, really good trade, right? Price sells off out of a strong supply zone. We get a nice green bar here, ignored, go short. And if you have put your stop above that green candle, this trade would have continued in your favor. 2/10/2025, wicked beautiful trade. Once again, price sells off open print. And the biggest thing here to notice in this morning sell-off is there's no GBI. When there's no GBI and prices just selling off, that is irregular. That's erratic. That's a violent sell-off. Do we want to chase violent sell-offs? No. Why? Because they cause extensions on larger time frames. When the moving average gets extended on a larger time frame, you can bet your ass it's going to reverse. So, when you're getting a violent sell-off in the morning, do not be the asshole. Excuse my language, but you cannot be this way. Do not be the asshole that chases it. Be the intelligent, highly intentional trader that waits for his entry criteria. I'm going to tell you this right now. I would never chase this. And it's because I am completely aware to the fact that there's a higher percentage, there's a higher probability that no GBI to the downside means reversal, right? Anytime the trend is irregular and you're identifying irregularities, right? Like meaning there's no structure, right? We're getting extended here from the 9. There's a very high probability that you're going to get a reversal or chop. Both those scenarios I do not want to get in. Therefore, I'm patient. I allow price to do its thing. I allow my entry criteria to present itself. Red bar, ignored, in long, targeting the upside target. Same day here, price rallies up, comes back down, and we take the market short again, putting our stop above that green bar. You can see here, ended up catching a beautiful trade to the downside. That's what I love about the strategy. When you can learn to spot it properly and trade it properly, you're not going to get burnt, right? You're going to actually be patient. You're going to be trading price the right way, and you're going to avoid bad setups. Go through your journal right now. I guarantee you 80% of your losing trades come from you forcing bad setups. You get rid of those bad setups. You get rid of those low intention trades, right, with irrational execution, and you're going to see your equity curve start to go in the direction you actually want it to. Really good trade. Here's a loss right here. Price rallies up. All right, next trade here. Here's a loss. Price rallies up. We get a red bar, ignored. We go long. We put our stop below the red bar. What happens? News comes out, and it wipes out our stop loss, right? Once again, I would take this trade again. There's nothing wrong with it. I was doing exactly what I thought was best, which was focusing on execution. And then what happened next? Price rallies up. We get the same entry criteria off previous day open print, so we take the market long. Beautiful trade, right? Once again, this is a numbers game. It's not a I'm always right game. I'm right 75% of the time, 76% of the time. I have to be able to let my trades run, helping me obtain that 1-to-3 risk-reward ratio. And on my losses, I got to keep them tight. My boy Todd says it the best. I'm only ever risking 1 bar. But on my winning trades, I'm profiting 1, 2, 3, 4 bars, 5 bars. That is what we call a successful and consistent equation. And then the last trade here, this is actually a funny trade, but believe it or not, with the volume lately, this entry did give us a $1 move to the upside, so the edge still presented itself properly, right? We got the moving average cross, got the red bar, ignored, took the market long, trimmed up top, absolutely crushed it, right? So, guys, the biggest thing that I want you to take from this, don't listen to me. Listen to the data. the last 6 months, we're averaging a 76, almost 77% win ratio. What if you became the highly intentional trader that had impeccable execution? This strategy alone would give you a 76% win ratio. You guys have to start understanding something. The reason why you're fearful, and the reason why you have ego, and the reason why you have low self-worth is because you can't trust yourself. You can't trust yourself because you haven't put in the appropriate work yet. You haven't worked in the right direction. If you want to become a trader that executes appropriately, that is confident, and that doesn't just blow his account over and over, you have to collect data and you have to make decisions based off it. You have to let go of trading emotionally. I know it's not as fun, but you have to ask yourself, are you trying to have fun? Are you trying to become the trader that you've always known you can become? Guys, I want you to do better. I want you to be a part of my team, and I want you to really push yourself to becoming that excellent person, the absolute best version of yourself. So put in the work. If you need anything from me, click the links below. Send me a message. My phone number is 315-565-8633. I do not care. Text me. I'm here for you. I love you. Drop a like. Drop a comment. I'll see you in the next lesson.